Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Ben Jones, Senior Index Specialist with Nasdaq Investment Intelligence, to discuss Nasdaq-100 performance as economic data starts to weaken out just a bit here. Ben, it's great to see you as always, especially on a Friday afternoon, our last segment of the week. And let's take a look at your first couple of charts here, and we can see where a little bit of this economic weakness is coming in.
Yeah, nothing like talking about economics as we head into the weekend. It certainly revved you up. But what's sad is that the economy is not revving up right now, other than a few things. And one thing that we see revving up, inflation. And this is causing some headwinds, I think, for the economy and consumer confidence. And so if we look at consumer price inflation right now, we see that it's growing at a rapid pace. It's cooled off a little bit the past couple months, but still rising to the point where we're seeing the type of inflationary growth that we saw back in 2008. Of course, that 2008 inflation was primarily led by the rise of crude oil price and energy prices. But inflation is an important part of this equation for, what is the market going to do tomorrow? In addition, we start to see consumer confidence waning. As we start to see the consumer confidence index, which measures, kind of the pessimism or optimism of consumers and their, financial conditions, we've seen that start to decline really the last few months. So these are some negative ticks for any economic or market indicators. And I think that is displayed pretty well in what you see this, leading indicator index on the next slide. We've looked at this chart before, and it basically shows you two things. One, it shows you this leading indicator, which looks at some important economic indicators, consumer spending, inflation, home sales, et cetera. But also looks at the Nasdaq-100. And what we're beginning to see is another disconnect between the economic indicators with the market. This leading indicator index is beginning to fall as economic conditions have weakened, so to speak. But the market, or at least looking at the Nasdaq-100, continues to push higher. So we do see a disconnect right now between the economy and the market, Jill.
Right. And Ben, it's so interesting because we always think of September as a historically volatile month, and really it's been quite muted.
It has. And I think more importantly, I think the market's expectations for future volatility is muted, right? We know September has tended to be a volatile month, October especially, right? With talking about all the headlines going back to the Great Depression, we typically see some market volatility during that month. But right now, looking at the Nasdaq-100 Volatility Index of Vol Q, which uses at-the-money options to get an idea of what the market thinks from a volatility perspective, right? Future index returns. And right now, we see just the persistence of low volatility, or more importantly, the persistence of the expectations of low volatility in the future, right? And so if we look at the market today, even with these negative headlines or just weakening conditions, investors continue to still have a positive view going forward, and they aren't expecting kind of any major kind of volatility spikes going forward, which I think is a good thing for the market. But it certainly makes you scratch your head, right, when we do see these disconnects between the economy and the market.
And Ben, it's interesting, even with the economic backdrop weakening a bit here, Nasdaq-100 is still continuing to outperform its peers.
Yeah, so what does this all mean, right? We take a look at consumer confidence and inflation and leading indicators, and how implied volatility is still relatively low. With all this said, is that the Nasdaq-100 continues to remain one of the better indexes in town, so to speak, when you compare it to other asset classes. When you look at a relative strength chart, which compares one index against another, or one benchmark against another benchmark, another asset class versus another asset class, we see that the Nasdaq-100 continues to outperform the S&P 500. Looking at a weekly relative strength chart going past the past 2 years, that's the chart on the left side. And now if we look at the Nasdaq-100 relative to cash, we continue to see that it outperforms, right? We did see some weakness there, again, during the heightened period of market volatility and during the height of the COVID-19 pandemic. But since then, from an absolute standpoint, the Nasdaq-100 remains favored over cash. So I think that's a positive sign for this index because of its resiliency and because of its relative strength relative to other areas of the market where investors can consider investing.
All right, Ben, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.